Hello, everyone. Happy Tuesday and welcome to Tax It Tuesday. It is February 25th. Unfortunately, it is my birthday, so I'm really happy to be here and, of course, celebrate another year. For this week, we're talking about tax credits for students, right? It's one of those things where it makes students happy. I know when I was a student, I was very happy when I heard that I was getting a credit, which is, a good thing. All right. With that being said, my name is Rose, also known as the accountant therapist, and I am the CEO of Brown's Advisor and Accounting Firm, where we provide an array of accounting services, including taxation, right? That's for individuals and businesses, and the list goes on. Nevertheless, if you are ever needing to connect with me for, let's say, an initial consultation, we can certainly do so, right? So you can reach out to us through our website at www.brownsfca.com or send us an email at info@brownsaaf.com. Just a quick recap of last week, right? So last week we talked about child-related tax credits, and really we talked about whether they were refundable or not, or if they were partially refundable, right? And that was the child tax credit, the credit for other dependent, as well as for the child independent care credit, right? And also I touched on the earned income tax credit as well. So if you did not get to see that video, definitely go ahead and check it out. So it's quite a few of them, and they really can work in your favor if you're eligible for it, right? So I'm going to jump into this week's topic. It's short, juicy, and to the point, right? So as we talk about credits for students, right, we're talking about folks who are in higher education. They're going on to college, and it could even be technical school as well, not just your traditional colleges. But before I go ahead and get into the tax credits, what I do want to begin to talk about is the fact that not too long ago, students had the ability to take advantage of a tax deduction or tax credit if they were eligible to do so. Right. So before I go into the credits and the deductions, I really do want to explain the difference between a tax credit and a tax deduction. Right. So a tax credit is a credit that can pretty much write off your tax liability dollar for dollar. So it can reduce your tax liability dollar for dollar. An example of that is, let's say you owe $1,000 and you have a tax credit of $1,000, right? Then in there, you see that wash each other, right? So you have nothing owed to the IRS. On the flip side, we have a tax deduction. A tax deduction is more so percentage, right? So it's not to say, hey, you know what, I have this deduction, it's going to wipe out my liability for the entire amount. No, it's only a percentage. And oftentimes that's based on your tax bracket, right? And oftentimes the tax credit is more advantageous. And that's the one that folks go with. If they ever had the ability to choose between the two, the tax credit would be the one that you want to go for, right? Because you're going to get more for your buck with that particular option there. Now, under the current tax code for 2024, there is no tax deduction for students. The only deduction that exists right now for students is the student loan interest deduction, right? Now, with the student loan interest deduction, it's any interest that you've paid towards your student loan, and it has to be qualified student loan, right? So if you know that you were paying back student loan last year, most likely you were paying interest. So if you were, what you do need to do is reach out to the financial institution or the lender, whomever it is, and ask them for a 1098E. That is the form that the interest that was paid in the prior year will be reflected on, which is something that is needed in conjunction with your other tax documents to complete your tax return, right? Because you're not going to be able to put that on there until you have that form there, because what you want is whatever form you receive to know that, hey, the IRS already received a copy of this, so I don't have to kind of look over my shoulder or wonder if they were to ever send me a notice in the mail. Right now, for the student loan interest deduction, it's an adjustment to your income, right? So it reduces your total income. All right. Now, in order for you to be eligible for this particular deduction, you have your modified adjusted gross income has to be $80,000 or less for you to get the entire amount. Now, if you made $80,000 or more, that's fine. but you begin to phase out. When I say phase out, that deduction amount begins to decrease, right? And when you're single, it starts at that 80,000, right? Once you hit that 80,000 and above, it starts to decrease. When you hit 95,000, if you're single, you're completely phased out. You can't expect not to receive this particular deduction because you made too much, essentially. Whereas if you're married, filing joint, those numbers are a little bit different, right? So it's 165,000 until you get to 195,000. That's when you no longer are eligible for this deduction. Now, this deduction here is worth, you can get up to $2,500, right? So whatever the student loan interest is, regardless of how much you've paid, if you paid more than that $2,500 amount, that's it, you're capped, right? If you paid $1,000 in student loan interest, that's it, right? So 2,500 and less. If you paid more, you're capped at that 2,500. Now, a couple of weeks ago, I talked about filing statuses. And the reason I talked about it way back then is because a lot of what we've talked about and will continue to talk about is going to be impacted by your filing status. And you'll see this deduction here I'm talking about today and the credits beneath it. If you are doing the married filing separate filing status, you're not going to be eligible for this. And this is one of those things or reasons why, you may want to reconsider using the married filing separate filing status in comparison to the married filing joint. Okay. Now that we've covered the only tax deduction that is available to students, right? And not even just students, actually, let me take that back a little bit. Even if you've gone to school a little while back and you're just still paying off your student loans, and you're still paying interest towards that, you would still be eligible for this credit, right? So there's no limit on how long you can claim this credit, just as long as you're paying interest and you fall within that income range and you're not using the married filing separate. Okay. Now I'm switching gears here. There are two types of education credits, right, currently, and that is the American Opportunity Tax Credit, oftentimes referred to as AOTC, and then the Lifetime Learning Credit, oftentimes referred to as LLC. Don't get it mixed up with the other type of LLC. Okay. So we're going to dive into the American Opportunity Tax Credit first before we get to the Lifetime Learning Credit. Now, the American Opportunity Tax Credit, it's a credit that is partially refundable, which is to say, hey, there's a portion of this credit that you can receive in the form of a refund, but there's a portion that can only offset your tax liability and or increase your refund. Right, so remember last week we talked about the different types of refundability levels to tax credits, right? Now, the American Opportunity Tax Credit is the most valuable student education tax benefit. It has the highest amount, right? Because again, we have that refundable portion to it. Now, the maximum amount of this credit here is $2,500, of which only $1,000 of it, which is 40% of that $2,500, is refundable. Right. So let's say you were to file your tax return and you're a student, you have no tax liability, but you claim this credit, you can expect to receive a refund of $1,000. Right. Now, to kind of go further into how this is broken down, 100% of the first $2,000 is counted towards that $2,500, right? And 25% of the second $2,000. So they're really looking at the first $4,000 of expenses that you've paid towards school. That's not to say if you paid more, not to say if you paid less that the consideration will be different. It's just a matter of 100% of the first 1,000 and then 25% of the second 2,000. Right? So if you paid a lot more than that, it's still going to stick with it. The percentage stands still. Okay. Now, when we talk about qualified education expenses, we're talking about tuition, school fees, books, supplies, things that you need for your coursework, right? But not living expenses and transportation like room and board, those sorts of things. That's not a part of this. And of course, if you receive scholarships, it is going to take that into consideration in conjunction with those expenses, right? So if you're getting scholarship and you're having these education expenses, if your scholarships cover all your expenses, of course, there's no eligibility there because somebody paid for you. Right. Here's the thing with regards to the American Opportunity Tax Credit, as I mentioned, you can get that $1,000 in the form of a refund, right? And the rest would only reduce your tax liability or help to give you more of a refund. All right. Now, in order for you to be eligible for this particular credit, you do have to have some type of tax identification number. So in this case, it could be an ITIN or it could be a social security number, right? And in order for eligibility to continue on with this credit, you have to have been in school at least part-time for at least one semester. Right? You have to be an undergrad student. So you're not eligible for this if you are in grad school. It's only if you're undergrad and you're pursuing a traditional 4-year degree program, right? And it can only be claimed 4 times. So that's incredibly important for you to know. Only 4 times. 4 times. Similar to everything else essentially in the tax code when it comes down to credits, there is a phase out point. There's a point where folks will no longer be eligible for this credit, right? So if you're single, if you make 80,000 or less, you have the ability to be eligible for the full amount of the credit, right? Once you begin to have more than that 80,000 and you start heading towards that 90K, you begin to phase out, which is to say the credit begins to reduce. Once you pass that 90K, boom, that's it. And this is your modified adjusted gross income, right? Now, if you are married, filing joint, it looks a little bit different, right? So it starts at that $160,000 mark, and then we've come up to our 180,000 mark. Then it's boom, that's it, no more. All right. So you want to kind of keep that in mind in terms of this credit. So don't be disappointed if you make a sizable amount and you realize that you're not able to claim this credit. Right. All right. In addition to what I've mentioned here with the American Opportunity Tax Credit, you will receive what is referred to as a Form 1098-T from your school. All right. I know they're not mailing it out as often as they used to in the past, so you may have to just log on to the school's website and go ahead and grab that from there. Okay. Now, with this credit here, the person claiming it can be you. It can be your spouse if you guys are filing a joint return, your dependent that you're claiming on your tax return, regardless of which party paid for the expense or if there was a loan, right? As long as the person that this credit is for is being reflected on the tax return. Now, certain things to consider in terms of what will disqualify someone for this credit is if they had a felony or they've been convicted. If they're married filing separate, again, this married filing separate thing pops up again. The person cannot be a dependent on another person's tax return, which is to say, if somebody wants to claim the American Opportunity Tax Credit, they have to file their tax return independent as single. No one else can claim them, because if somebody's claiming them, it takes them away from being eligible for this credit. Okay. Now, with regards to the AOTC, if you are a non-resident for any part of the year, you're not eligible for this particular credit unless you elect to be treated as a resident for federal tax filing purposes, which is to say, if you file a Form 1040-NR, you're not eligible for this credit. But if you file a Form 1040, hey, now we're talking, you have eligibility here, right? So that covers it for the American Opportunity Tax Credit. So we're going to go ahead and switch gears and talk about the Lifetime Learning Credit. Again, short for that is LLC. Now, with the Lifetime Learning Credit, what's unique about this is the fact that there's no limit to the amount of time someone could claim this credit. So remember the AOTC, you're limited to 4 times. Right? But the Lifetime Learning Credit, it's lifetime, as long as you're in school, you can continue to go on and take this credit. And this is something that's pretty unique, right? Let's say you did your 4 years and now you're in grad school, this is the credit that you're going to be eligible for, right? And students can be enrolled in school and be obtaining a degree, or maybe they're gaining new experience. They're going to technical school, getting some type of certificate, professional development. They have the ability to be eligible for this particular credit here. Right now, this credit is non-refundable, which means you cannot get this in the form of a refund. However, it can cause your refund to be increased or decrease your tax liability. Now, this credit is worth up to $2,000, which broken down is simply 20% of the first $10,000 of expenses, right? So 20% of that first $10,000 of expenses. If your expenses are more than 10,000, they don't care about that. All they care about is the first 10,000. All right. Now, similar to everything else, we have a phase out point, right? So if you're single, you make less than $80,000, you can't expect to be eligible for this credit, right? Once you begin to pass that 80,000 mark and we're creeping up to that 90,000, the phase out begins to increase, which means the amount of credit that you're eligible for begins to decrease. And once you pass that 90K, that's it. No longer eligible, right? And on the flip side of that, for folks who are married, filing joint, it starts at 160,000. So if you're below 160,000 jointly on your tax return for your modified adjusted gross income, you're fine, right? The eligibility still sticks. But once you start to pass that $160,000 mark, and we're heading up to the $180,000 mark, you begin to phase out. And it's actually really interesting how small this gap is, right? But it's just one of the things where this is a code, this is a tax code. And then lastly, for this piece here, married filing separate, unfortunately, you're not eligible for this. So I really want people to understand that it's important to evaluate whether or not you want to do married filing joint or married filing separate. Of course, again, there are situations where I need to do married filing separate because of specific situations. But unless you've assessed your entire picture to see, well, does it really make sense? Then you go ahead and make that choice. Okay. Now, when it comes down to these particular tax credit here, the American Opportunity Tax Credit and the Lifetime Learning Credit, it could be a strategic move. It should be a strategic move. I know nowadays a lot of high schoolers, right? They're being enrolled in college courses, which oftentimes they may be paying out of pocket. Maybe their parents take out a loan, something of that sort. You want to be strategic with this, right? You don't want to take the American Opportunity Tax Credit the first chance you get, unless you're maximizing the amount of the credit that is available to you, all right? So oftentimes what you may want to consider is if you have a child who's in high school but taking college credits, you may want to consider the lifetime learning credit so that you can save that 4 years of $2,500 to get when you can get the full amount, rather than just taking a piece of it and forfeiting the rest, right? So it's something you really want to be strategic about. A question that we oftentimes get is, well, what if my employer paid some or all of my tuition? Do I still qualify, right? So remember that the credit is issued to you based on expenses that you pay for out of your pocket, essentially, right? If somebody else is paying for you that is not a loan, then it's already covered. It's almost as though you got a scholarship from somewhere, right? Versus if they only paid a portion of it, then the portion that you pay out of your pocket or you take out a loan for, then that amount there would be eligible for this particular credit. Because remember, a loan is still you that is responsible for it, versus a scholarship where somebody else is paying for you, right? So just to quickly recap of what we talked about today, we talked about the student-related tax credits, right? But first, we talked about the fact that you could be eligible for the student loan interest deduction. But outside of that deduction, the rest is all credits, right? So we have the American Opportunity Tax Credit that you can claim only 4 times, and you could be eligible for up to $2,500, of which a portion of it is non-refundable and a portion is refundable, which referred to as partially refundable. The Lifetime Learning Credit, also known as LLC, has no limit. You can claim it as many times as you have been going through the educational process. It's worth up to $2,000, but it is non-refundable. Okay. Under the current tax code, there is no tuition and fee deduction, right? So it's no longer an option currently. And lastly, of course, we said the student loan interest deduction, you have that. And keep in mind that all of these have a phase out range, right? So you start somewhere from your modified adjusted gross income, and then you end somewhere to where you're no longer eligible for it. Okay, so this was pretty clear, to the point. If there are any questions, certainly let me know. Again, my name is Rose Brown, also known as the Accountant Therapist, and it was absolutely a pleasure.